Good morning. Today we will be doing on Unit 2 of Chapter 9, the instruments of trade policy. In this probably we are going to look into tariffs, non-tariff measures, export related measures. Here the number of answers probability or questions probability are innumerable because there are a lot of things. The only difference you would have to know between tariff and non-tariff measures is one, tariffs, the money is involved. Non-tariff measures are more based on qualitative or quantitative restrictions. Those are the only difference you will probably know. But in this specific tariff is a possibility. Then definitely ad valorem tariff also is a high possibility. These two, one question will definitely come. Then probably there is a question in most favored nation tariff. Preferential tariff, a question is possible. Preferential tariff is when you have nearly all countries are part of at least one preferential trade agreement. So they will promise to give another country's products lower tariffs than the most favored nation tariff. So it will be lower than that. So these agreements are usually reciprocal. I scratch your back, you scratch mine. So there also one question is possible. Please understand this NAFTA, North American Free Trade Agreement, and what are the countries involved in it. So the North American Free Trade Agreement is between Canada, Mexico and USA. So I can ask you a question on what are the countries as a part of the North American Free Trade Agreement, and I can write Canada, Mexico, USA. I might include Greenland, or I might include Brazil, whatever. That time you should know that it is not a part of NAFTA, that is North American Free Trade Agreement. Even if I use Brazil, you might understand. I might use a country like Peru or Chile. So that time you should be very careful. One question is possible on what are the countries involved in the North American Free Trade Agreement, or what is the full form of NAFTA, NAFTA. Both questions are possible here. So there might be a question on anti-dumping duties. This possibility is there of anti-dumping duties, where a protectionist tariff is and a domestic government imposes on foreign imports so that they don't use me as a dumping ground when the product doesn't sell in their country. So those are anti-dumping duties. Definitely there is a question. These are the ones. Countervailing duties also. So here specific tariff, ad valorem tariff. Then we talked about preferential tariff, and there and then we talked about NAFTA. Then here you can look into anti-dumping duties and countervailing duties. Countervailing duties are nothing else but that aim to offset the artificially low prices charged by the exporters because they enjoy a lot of export subsidies in their country. So it's possible for them to lower the prices so well they will sell it in the importing country at a very low cost, which will affect the domestic industries in the importing country. Countervailing duties, I put on extra duty so that the price again goes back to a normal level to match, if not higher, to match the duties to my domestically produced goods. These are countervailing duties. A question is possible on this also. So please check up on the effects of tariffs also, and just go through it. Then you go through non-tariff measures. What are non-tariff measures? So it does not involve money. In this, the more important things are sanitary and phytosanitary measures are important. You can concentrate on that. Import quotas are important. Then probably you will go for just go through all of them, but I am only giving you a gist. Trade related investment measures are important. Government procurement policies are important. Please concentrate on these, but go through the others also. Okay, trade embargo is very important. Trade embargo is very important. What are embargoes? Okay, questions are possible on these. Then export related measures in this, the voluntary export restraints, that is VER. They might ask you what is VER, full form is voluntary export restraints, and in this please concentrate on this particular topic called voluntary export restraints. It refers to a type of informal quota administered by an exporting country voluntarily, restraining the quantity of a particular good that can be exported out of that country during a specified time period. This is maybe because the domestic consumption should not be affected, because see, when I export it, I get more money than internal sales. So for that I might end up doing this. So I try to restrict the amount, the quantity that can be exported out of my country. Like China now recently has decided to little curtail the amount of silver that it is going to export. So it's possible. Right now it doesn't, it's only in a talk, maybe they will introduce it. So like that our country has a restriction on the amount of food grains that can go out of a country. So those are voluntary export restraints. So this please concentrate on this particular topic. So like I already told you, all these topics need to be concentrated on, and there are a lot of tariffs, quotas. VER is very important, embargoes are important, for sanitary and phytosanitary measures are important. Then you can go for specific tariff, ad valorem tariff. Then anti-dumping duties are very important. The voluntary export restraints are important. These are the key topics in this particular lesson. So please see that you are thorough with these topics and you would have to do it. Thank you very much.